Hello, beautiful traders. Today we're going to go over back testing and what it means for me. So without further ado, let's go ahead and get started. So what exactly is back testing? Well, for me, it is when I open my trading view and I hit the replay button on any pair, whether it's forex, the stock market, or cryptocurrency, and I am using the strategy to test and see if my risk to reward can be improved, my entries can be improved. I'm actually taking notes on how I can become better at my strategy and becoming a more consistent winner. So without further ado, I'm going to show you what I do on Ethereum USD. I am on the daily. I'm going to hit this replay button, and literally what you do is just drop your drop your replay on any period of time of this chart, and then you start your analysis like as if it was a live market. So I always start on the daily time frame, and I try to gauge where we are in the market. Ultimately, I can see that this market had been making higher highs, but right now there's a possibility that well, right now this market is making lower lows. The way I confirm is I use my most recent swing high and swing low, and I look and observe whether the market has continued up or if it's making lower lows, and then I get a general consensus of my bias. So for me, I'm going to go ahead and look for shorts in this market. I'm also going to identify, based on where I'm at currently in the market, where my next area of support may be at, and to see where this market could go. I am going to use the low of this week because this tells me this was a strong area to where the market had bounced off and had made some higher highs after that. So this is a good support area to be interested in. After that, I'll go ahead and drop to the 4-hour time frame. I'll go ahead and get rid of this because I already know we're in a downtrend. And I do the same thing. I'll go ahead and figure out where I'm at in relation to the daily time frame and identify my swing high, which would be this awesome little guy there, and then my swing signal candle right here. Market had retested that area, had a beautiful drop. Now it's pulling back until the next, hopefully back into that area again for another opportunity. Or it could go to this left shoulder right here and make a right shoulder for the sell down. So I am going to mark this area of interest as well, just in case the market does not return to that area. And as you can see, based on how I marked this up, the market is rejecting off of that left shoulder for the head and shoulder pattern. And I focus on, once again, on the signal candle. I just sometimes notice things while I'm trading. So now that I have a swing high right here, I'm looking for the market to close below my signal candle right here. Remember, in my strategies that I use, my signal candle is the candle to the left of the swing high or swing low, depending on whether or not I'm looking for sells or buys. So this one right here will be my signal candle unless the market makes a higher high, and then I will adapt and adjust. And I'm going to go ahead and label this as my swing high. All right. That was a mouthful. Market did close below here. My goal right now is to, get better at my entries. I confirm the close below on the 1 hour, and then I usually drop to the 15 minutes for entries. What I've noticed on this particular pair is that it is very wickety wick. So I don't trade this normally, but I'm just letting you guys know in advance that I've been practicing on this throughout the day, and I've noticed that it does not respect market structure all that much. And you'll see what I mean, because this is probably going to be a trade that it does not act right. So I have the break and close below here on the 1 hour. Let me go ahead and drop that line there so you can see. That's my confirmation. I'm waiting for it to start pulling back. How do I know that it starts pulling back? Well, for one, the pullback begins for me is when it starts making higher highs above my starting point. And so what I mean by that, if my break below was here and I was to use this as my starting point that pushed the market down, I need this market to keep pulling into that starting point to let me know that, hey, you're pulling back. The moment it pulls into that area and then breaks below my starting point on that current move, then I know that the sellers are now in control. So for example, this market have pulled back into this area, has started the pullback right here. How do I know that? Because this was my starting point right here. This is the last candle that pushed this market down, and I wanted to pull into my zone. And once it gets to the zone, I am looking for my starting point, which is my signal high, swing low strategy as well. And so based on this move right here, this will be my swing high. And so I'm going to show you the difference if I had used this one versus this one. When the market closes below here, I know it's safe to take the entry. If it closes below here, right here, like it did now, it's a possibility that I might get more pull, more drawdown if I was to go ahead and be looking for entries. So we're going to go ahead and move this market forward. And I'm going to show you, like, had I take entry here, I would have drew my fibs from here to here to take entry. So I would have been in this trade right here. Once again, that's not the true swing high. And I already know this because there was a higher point before that market started moving down. I'm in the trade, I'm making some money, but the way I set my TP is at the previous low. So my TP will be here. And the question is it enough push for this market to make it down there? We're going to find out together because I really don't know. This is my typical process where I set my risk to reward to just kind of see where it's at. My stop loss is a few pips, 5 pips above this green line, and we're going to go ahead and analyze this trade. So if I would have took it here like normal, I would already be in this trade, and I'm pretty sure I would have gotten wicked out. But let's not lose hope. We're not there yet. Bam, I got wicked out. Once again, like I said, I know this. I'm starting to learn this pair. So in this case, like I said, I would have used this as my swing high and this as my area where the market needed to break and close below. Because it did not break and close below, now, and it created a new high, I would literally, let me go ahead and exit out all of this. I would literally adjust and look for my next swing high. In this case, this looks like this will be the new swing high because the market has not made any new highs. This will be my signal counter right here. And when the market closed below here, go ahead and show y'all some things. I will go ahead and pull out my magic wonderful fibs, my discounted fibs. Market from swing high to swing low. How do I get here is the question. This would be my entry. Okay, just to recap what just happened here. Market made a new high. I identified my signal candle. I marked my zone. I drew my discounted fibs from swing high to swing low. This was the last swing low that pushed the market to the swing high. And my entry is always on the purple line. And as you see, after the break and close below, this next candle would have got me in the trade for a sell. My TP would have been from here to here, this swing low. And a few pips above just to see where I'm at. Now, please keep in mind that this is cryptocurrency, and I've noticed that I needed to give myself more than 5 pips and to also enter on the 30-minute, because as you can see, I'm like barely there, and I got a feeling it's going to violate again before it actually go into my direction. Matter of fact, it probably going to go back to this area to retest, but we're going to see what happens. Uh-oh. It looked like you want to act right. Yay! I finally got one today. But it's not all about winning. Like, I would have not known that in this particular pair that 5 below above this. Let me go ahead. Matter of fact, let me just see if that would, if I would have went with that rule, 5 above that. So that would have put me there, literally there. Now with the spreads and stuff, let me go ahead. This high was 43.89, and that one's this one. So okay, I barely got saved by 1 pip. So my notes for this particular pair would be like, okay, instead of 5 above, let me just stick with 10. And then, so let's go ahead and change it. Instead of 5, we're going to do 10. So 44 even. Now, you're probably like, well, your risk to reward ratio would not be that great. Okay, hold on. It's 10, but instead of entering at this purple line, let's go ahead and enter at the golden line. And bam. Let's see what we're doing. Now, same. This is why you backtest, people. This is all about learning. Because I've been working on this pair all day, and the same thing has repeatedly happened to me where the market, just when I'm thinking I got my entry, it pulls back and before it goes into my direction. And so a couple things I want to still work on is knowing when the pullback has finished, even though it closes below my signal candle. But also maybe, okay, maybe I need to just take entry on the 30-minute, because on the 30-minute it's gonna tell a whole nother story. On the 30-minute, you're gonna see that this pullback don't really begin to wail up here, and it makes this high right here, and that would have been my signal candle. So one or the other is gonna give. If I want to work on the 15-minute, then I'm gonna have to make sure I have tighter rules to support this particular pair. So once again, back testing is trying your strategy on different pairs, figuring out how to improve your entry, your risk to reward, and your price action, recognizing, knowing when the pullback began, when the pullback is done, when to enter. Without further ado, y'all, I'm done with this video. Much love, good luck on your trading this week. If you have any questions, feel free to drop them in the comments below, and don't forget to like and subscribe. I love you guys. Take care.